If you can remember, we had a video before saying that Sam Bankman-Fried is the White Knight. Sam Bankman-Fried saved 2 platforms earlier this year, earning him the title of Savior of the crypto industry. However, the title did not last that long, as traders suddenly rushed to withdraw funds in his FTX platform. Now, it is said that FTX is going down just like what happened to Celsius and Voyager. Now, this downfall is a cause of concern for the whole crypto world. Thank you for watching Diversified Streams, your go-to YouTube channel for all things crypto and finance. Be sure to check out our community post about these subjects. We are curious to know your opinions on these matters. Also, if you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto. And make sure to keep your notifications on so you'll be updated with our latest videos. We frequently post so you wouldn't want to miss them. In today's video, we will be talking about the crash of FTX and its implication to the crypto world. Hang on because we have a lot of things to talk about. FTX and Alameda Research, 2 of the largest crypto exchanges, collapsed a few days ago, and the crypto market have collapsed in kind. Today, I am going to tell you a bit about these 2 peculiar crypto companies and assess just how much this could affect all of crypto. FTX's fame began to soar in 2020. This was partly caused by the extraordinary high levels of stimulation which persuaded many millennials to trade on FTX with 100 times leverage on altcoins that hadn't yet been published and crap coins. Project Serum, a DeFi project by FTX, also contributed to FTX's success. Those of you living in 2020 will recall that the infamous DeFi Summit took place at that time. With 1000% yields and all the other DeFi degen stuff, this is really when all the DeFi protocols really took off. Additionally, that's when the cryptocurrency bull market really got going. The interesting thing is that people like Sam weren't at all well known back then. Now though, things are different. If you frequently use Twitter for the cryptocurrency community, you may recall all the jokes that claimed that the community was merely a shell of Sam's larger universe. This relates to everything that transpired with FTX and Alameda during the past week. And I'll say it again. The situation is always shifting. It is also unclear exactly when FTX and Alameda started to have problems. However, believe it or not, when the markets fell in response to the pandemic more than 2 years ago, Alameda was reportedly just hours away from insolvency owing to liquidations. Sam made this implication during the Blockworks interview when talking about Sam Trabuco's crash-related Twitter thread. This is significant because it implies that Alameda has been involved in dangerous tradings for a considerable amount of time. Given that Alameda was of course the principal market maker for its own exchange, it is entirely possible that FTX was involved to some extent. According to what I can tell right now, the collapse of FTX started with a CoinDesk article that was published on November 2nd and revealed that a sizable portion of Alameda Research's assets were held in FTT. More than a third of Alameda's $14 billion balance sheet was held in FTT as of June 30th of this year. Many rumors concerning the nature of the connection between FTX and Alameda began to circulate on social media in the days that followed. The majority of this conjecture concerned the potential that cash from FTX users were secretly making their way to Alameda. As a result, worries grew that FTX might not have enough cryptocurrency on hand to honor all users' withdrawals. Crypto investors gradually began to withdraw from FTX out of worry after the recent failure of cryptocurrency platforms like Celsius, which had engaged in similar shady activities with consumer funds behind the scenes. When Unchained Sleuths learned that FTX's stablecoin and other cryptocurrency holdings were rapidly depleting, the bank run on FTX intensified. Alameda started taking stable currency like ETH and other cryptocurrencies out of other exchanges to move to FTX, but that didn't help. This essentially proved what Sam had been denying on Twitter the entire time. FTX was under stress due to user withdrawals. The Alameda balance sheet given by CoinDesk was accurate, but Carolyn implied on Twitter that it wasn't. Now, what do you think really transpired between Alameda and FTX? Did they really engage in deadly shenanigans? Or are there other possible explanations for the sudden crash that they experienced? Let us know what you think by commenting below this video. And while you're at it, check if you have liked this video and if you are already subscribed to our channel. If you're not, better do it now so you'll be a part of our growing community. Binance indicated that it will be selling its FTT as soon as it learned what was happening at FTX. There was conjecture that FTX will dump or delist Binance's BNB currency in retribution after learning that Binance would be selling such a significant amount of FTT. Both tokens fell as a result of the fight, and the uncertainty raised their volatility. Bankman-Fried then took the exceedingly dubious choice to openly propose to buy Binance's whole FTT investment at a price of $22 per share over the counter. This increased speculation that FTX and Alameda were using FTT as collateral for cryptocurrency loans and were concerned about being liquidated. It is highly likely that FTT was being used as a collateral for a lot of the futures trading on FTX, even if I haven't seen any direct evidence of this. You may remember that this was one of the main uses for FTT, and it is possible that other whales besides FTX and Alameda also used a lot of it as collateral. Despite having a fully diluted market cap in the billions, FTT had limited liquidity, which made it easy to drive its price up or down with little investment. This implies that it is feasible that worries that Binance might sell FTT were sufficient to cause a price drop before Binance sold a single token. This, in my opinion, led to hundreds of millions of dollars worth of FTT liquidations on FTX, which, as a result of the token's lack of liquidity, caused its price to decline even more quickly. I think that in order to save FTX from collapsing, FTX and Alameda started selling out the other cryptocurrencies they owned, which led to the crash of other cryptocurrencies. At about this time, rumors surfaced that FTX had begun suspending withdrawals. Due to their allegedly enormous war chests, many in the cryptocurrency industry couldn't imagine that FTX or Alameda could possibly be nearing insolvency. Over the course of its existence, FTX alone raised more than $1.8 billion from investors. Then, the unimaginable occurred. Binance intends to purchase FTX to aid with the liquidity crisis, CV and Sam revealed. This proved that FTX was in jeopardy and raised the possibility that it might be saved if its blending with Alameda wasn't as bad as thought. Sadly, it appears that FTX's financials were substantially falsified because Binance withdrew from the agreement earlier after FTX disclosed a $8 billion deficit. In essence, this proves that Alameda is also having problems, and if you require additional proof, visit their website. It has been taken offline. This takes me to the crucial query. How much might the FTX Alameda scenario have an overall impact on the crypto markets? As for the cryptocurrency market, it is already in freefall, and I'll say it again, much of the sell pressure is probably coming from Alameda research. Alameda is not simply another cryptocurrency startup, which explains why. They are market makers, which means they possess a sizable portion of every cryptocurrency listed on every exchange. Alameda made 10% of the cryptocurrency market last year, and that percentage was likely considerable more until recently. If you want an even more frightening fact, think about the fact that Alameda has received the most of the 110 billion USDT that Tether has ever issued between 2014 and 2021. About 50 billion were given to Alameda. According to Sam's interviews, Alameda was using this USDT to avoid banks. Alameda was now offering liquidity in addition to exchanges. Especially on Solana, Alameda was one of the biggest liquidity generators in DeFi. This is mostly due to FTX, the previously stated DeFi project serum, and the significant part it played in Solana as DeFi procedures. In relation to Solana, Alameda and FTX both made significant investments in the project and numerous coins within his ecosystem. Alameda has made nearly 200 investments in cryptocurrency projects and businesses, according to Crunchbase, while numerous sources indicate that FTX has made at least 50 such investments. There's a good chance that all the cryptocurrency that have fallen the most in value over the past week had a greater exposure to FTX and Alameda. Regulations for cryptocurrencies follow. The worst aspect is that they gave the impression that they were the top of the crypto food chain. The fact that all three of them have dramatically fallen from grace will leave a lasting stain on the cryptocurrency sector. The most bizarre aspect is that many angry individuals and institutions in the cryptocurrency ecosystem are pushing for aggressive crypto regulations, specifically increased transparency as a result of the FTX meltdown. They want various kinds of regulation concerning the storage and isolation of consumer assets from cryptocurrency exchanges. We accurately predicted that this would occur. Sam's own planned crypto laws will probably never become law, if there is any good to come out of this genuinely horrible scenario. Even though many people's opinions on that subject have probably already been formed, there may be more to the story than we currently realize. The fallout we've already witnessed is a sobering idea I leave you with for the time being. it is really only the start of something that will take months or more to resolve. The majority of cryptocurrency and tokens are expected to experience lower lows until that time, so brace yourselves. The real crypto winter has only just begun. And that is it for today's video. I hope you found this video informative and helpful. As always, if you did, please show us some love and support by giving this video a big thumbs up and subscribing to our channel. And make sure to keep your notifications on so you'll be updated whenever we post new videos on all things related to crypto. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.